All right. Good morning, everyone. It's Tim Davis coming to you guys with a early market review. And today is now Tuesday, March 28th. Tuesday, March 28th. The time is close to 6 a.m. About 5:45 now, Eastern Standard Time. And you guys have been following some messages I've been posting in the Discord. I've been posting a couple of messages about where we are now for this week, because this week is going to be very, very crucial to the overall market. And I'm going to show you guys how the VIX has broken to a new zone after it broke above a level of resistance back in the early part of March. It broke above a new zone. Now, as you see here, this is my VIX futures chart that I have my chart on my computer now, and this is a 4-hour chart. And I'm going to stick with this 90-day 4-hour chart. I'm going to show you some transparent over the past 90 days. Look at the left side of this chart. Well, back in the beginning of the year, this shaded area that you see I have here, as the VIX started to pull back from a previous rally, a long-term or a couple-month rally, the VIX started to pull back. Once it hit this zone, this zone automatically looks like it became a sell zone. And what I mean by that is that every time price action of the VIX futures got into this area, we would see some type of pullback. If it got in this area or touched this area, we would experience a pullback. You see it there. You see it here. You see it here. This is throughout over the past couple of months. You're seeing it here. It breached it a little bit, but could not get well above that zone. See it here. Back in towards the end of February, we see it here back up to that zone, just a little towards the end of February. And now look what happened. And every time it broke below the zone, eventually it started to establish a strong level of support right around this level down here. We see a bounce off of this level here, then back up to the zone. We see a bounce off of this level here, then back up to the zone. Then all of a sudden, longer-term pullback, we see this zone, this support be challenged a couple times beginning a part of March. And then look what happens. We come back up to the zone, pull back, hit the bottom of the zone, and ricochet, and had a big confirmed bounce out of this zone, where we bounce out of the zone here around the second week in March. Now, form of resistance, as I told you guys before, this was resistance before. Form of resistance, this whole line, this whole zone here is now becoming a level of support once we break above it. And that's what happened. Form of resistance becomes support. Get to break out above it here. Look what happens. We bounce back to that zone. And we get a bounce. Back to the zone here, another bounce. Back to the zone here, another bounce. And now this zone, instead of it being a sell area, right around here on the left side of the screen, it was an area where it was accumulating positions, but it was sell orders. Every time we hit that zone, we would sell off, hit that zone. So this became a sell zone. Now it appears as though that this VIX level is now a buy zone. Look what's happening. Every time we hit this level anywhere above it, in it, or just below it, there's a buyers come in and they push price back up. Here, buyers come in, push price back up. This zone is becoming a strong buy zone, which is good for the VIX and not good for the markets. And I'm going to show you guys what's happening on markets now. Buy zone, push VIX back up. VIX dipped all the way down to the bottom of the buy zone here and right back up. And then, as you can see here, top of the buy zone, price went back up. And now where we are today. Now, should we break this buy zone, then this lower support is going to become in the picture again, but it doesn't look like that's ready to happen just yet. And now that we are established that this is a buy zone for the VIX now, look what's happening now. So as today is the 28th, early morning, look what's happening. VIX got back down in that buy zone. VIX futures back down in that buy zone. Look what's starting to happen. I see some green candles starting to form. Like we're ready to take another bounce off of that buy zone. Look at some of the confirmation that we see. After we got this strong bounce up to about 28 here, we started to see the VIX pretty much, start to trend lower, but continue to get bounces off the buy zone. Look at the full stochastics. We got a strong sell signal right here at around the 24th of March, in which reason why you see these wicks up here, but strong sell only back to the buy zone. So we got this confirmed action of a downward sloping trend, or downward trend channel, or downward trend line back into the buy zone. And look what's happening now with the full stochastics. We're starting to get a confirmation of a buy of the VIX futures right there. Again, VIX, oops, I mean it. Oh, what is my cursor doing? Did I mean to do that? Hold on. All right. So now we have the VIX back into this buy zone, buy area, and look what's happening to the full stochastics, the oscillators. They reached oversold territory and they're starting to turn up. It's percentage oversold territory and the oscillators starting to turn up. CCI oversold territory and the oscillators are starting to turn up, with the green line crossing over the green oscillator line crossing over the yellow one, representing a buy signal for the VIX. So if VIX futures is showing us this now, what can we expect when the market opens today? The VIX futures already up about 1.27%, as you can see here. If you guys been following me the past couple of weeks, I said once we broke above this level, the 20 area is going to between 21 to 22 is going to be a strong level of support. Told you guys that we're not going to, more than likely, we're not going to see price action drop back down below 20s. Now, price action of the VIX should start trickling back up as we go throughout the rest of this week, which means the overall market should start to see some more struggle. But that said, the key level that I'm really focusing on over these next 2 weeks or so is this line that you see me. This is a strong level of resistance up here, right around 30. And as you can see, the VIX attempted at when it got that first breakout towards the middle of March, got up to about 29 bucks. And we pulled back all the way back down to the buy zone, but the VIX stayed elevated above 20. So between 20 and 29, that is some strong volatility, folks. And I do think vol is going to do nothing but continue to go high over these next couple of months. I think these next couple of months, we're going to eventually see vol break out above 30 and start to establish a new level of support in a new buy zone. A new level of support. I think this level of resistance, which is up here now, this is the next level of resistance around 30. Once we break that, folks, the markets are really going to be in trouble. Let me draw your attention to a daily chart real quick. So we got up to as high as 34 bucks back in May of 2022. And that level has been a strong level of resistance. So this is a diagonal level of resistance. And I drew that resistance line signaling eventually, if we break above this level, we're going to see a next challenge towards 40. So now we establish a new buy zone right now. I think the next level of resistance is up around 30. If we break above 30, go towards 40, we'll probably pull back and test 30, and then start a new possible establishing another stronger level of support above 30. We're paying close attention at least over the next couple of weeks. It's hard to pinpoint when it could happen, but I do think we're going to get a bounce away from this level of resistance. So away from these wicks that has been established recently. So all these wicks that have been established recently. I think we're going to get a break above these levels eventually. And eventually a sustainable break above these levels, and then possibly a break above 30. So that's what I'm looking forward to happen over the near future, next couple of weeks. We're still in the bear market, and until we're out of this bear market, we're going to continue to see the VIX continue to perk up from time to time and break into break above new levels of resistance and continue to move higher as we start to go on deeper into this bear market. The next phase of the bear market, I think we're starting to enter the next phase of this bear market. So that's what we look like, folks. Again, I do think that the VIX is getting ready to have another run this week. So keep that in mind. Now let's look at the regular indices, because I pointed something out there too this morning. Let's start with the Dow Jones. Here's a picture of the Dow Jones now. Now, I have a couple different lines drawn here on this 4-hour chart. This is the bigger picture. This is a wide range between the top trend line, which is around 34,275, 34,000, probably a little bit higher than that. Yep, so right around 34,000. Let's say 34,000 to 80 to about 34,700, which is where this little range is. So at the top of this area here, a strong level of resistance, and we pull back down to as much as all the way down to about 28,660, as you can see here in this white box, 28,660. So between 28,660 to 34,712 has been an area of a range trading area for the Dow Jones. We hit the bottom of this range. We travel from the top of this range to the bottom of this range from August 8th, around August of last year, down to about October of last year, and we got this little bounce back up to the top of the range. This is where we are now. So August, we went back up to the top of the range. October, back up to the top of the range, stayed around the top of the range until about December, started to drift below it just a bit, and then right back up to it. So when we started to drift below it, it was a new level of support that was actually established, like a strong area that you can see that was established right around here. You see that area there? So we came down to that level, established a new temporary level of support, continued to bounce around from that area in December. Then we went back up to the top of the zone, bounced back down below to that area in January, right back up to the top of the zone. And now look what happened. Look what happened. We broke below that zone right here. And then what happened? We started to establish a new downward trend channel. So new downward trend channel started to form, which is what you see in the solid lines. Now, with that new downward trend channel, we'll probably see the same thing, another little snaking area downward. The ultimate level of support is right down here where we bounced from in October. If we break that level, we're going to see some major selling to the downside. So now that we're in this channel, every time we get back up to the top of this channel, it's like we establish another sell zone. Here, selling pressure. Here, selling pressure. Here, sell. Here, selling pressure starting to come in. And we're starting to see the oscillators below. Now, I already showed you guys what the VIX is showing us. So the VIX already confirmed this. So the VIX is already confirming that it wants to go higher, which means overall market, even though VIX is correlated to, is opposite of the S&P, but the overall markets normally follow the S&P. So eventually. So with that established, I have no doubt. Well, nothing's 100% concrete, but I don't believe we're going to get above this diagonal level of support. Of resistance. Then look at the oscillators. even though some oscillators are conflicting, look at the CCI. CCI is already starting to hinge lower as though it's ready to sell off. As though price action is ready to sell off and the CCI is ready to head back down. That's what I'm gonna believe in today. And for the rest of this week, looks like we're ready to sell from the top of that range back down to the bottom of the range. Then we have to see what happens. Let's see how far it goes. But you see the zones that I have established. We're not struggling. Bulls have been struggling to get back above this diagonal levels of resistance, struggling. And the bears have failed to push price action below this diagonal, but it's continuing to create lower lows along the way. See, it's continuing to create these lower lows along the way, which is confirming this overall downtrend. This downtrending channel that we're in, it confirms every time we create these lower lows. That means every time we get to the top of that range, we pull back and create a lower low than a previous low. Probably going to see the same thing here soon. Probably going to continue lower, and we'll probably break lower than this low. So that's what the Dow Jones is showing us. So as when we open today, we're probably going to see selling pressure. And it can happen throughout the day, anytime throughout the day. We can get, some buyers step in, push price up in the first part of the morning. But I think by the end of the trading day, that's what I normally look at because I'm not a day trader. So I look to see what can we expect throughout the day, and then towards the end of the day, I do not think we're going to break this upper zone. And again, the VIX is already giving us confirmation. VIX futures giving us some confirmation that things are not looking good in the near term for overall markets. Excuse my dog, folks. I gotta get this in. Here's the S&P. Looking at the S&P, same scenario. Look at the bigger picture. You see upward trend line I have here, the dash trend line. That's a strong level of resistance. And every time we've got to that level, we have pretty much sold off. And in October, we bounced from this level at the bottom, which was a strong level of support. And it just like the Dow, look at this little area of zone here that was established halfway through midway of this particular range. You had a little range that was established here that turned into a strong level of support, temporary level of support. Oops, can't get that drawn right, but you get the picture. Let me draw, remove that. Let's remove you. So this area here has turned into a strong level of support temporarily. And I can even draw it over here. So that area became a strong level of support temporarily. Every time we got to that zone, we get a bounce. Same thing over here, believe it or not. Even in this downward trending channel, you see what happened when we got to that zone. We got a bounce. But look what's happening. This upper trend line has already failed. We've now established a new downward trending channel. And this shaded area down here is a strong area of support, which caused us to bounce from this shaded area. But it is on the way down since we topped out around I guess couple days, about a month ago, topped out around this range here. Now we're starting to create lower highs and lower lows along the way, along this channel, creating lower highs. So every time we pull back to the bottom of this channel, we create a lower high than we did previously. Got to bounce here, up, a lower high, all the way back down to the zone again. A bounce here. So what I suspect the next time we come back down to the zone, if the zone doesn't create any buyers, we're going to break through the zone and make a run for this lower trending, lower diagonal trend line. So that's what the S&P looks like right now. Take a look at the NASDAQ. It's our NASDAQ 1-hour chart. same scenario. But NASDAQ, folks, it's been, believe it or not, it's starting to look a little weaker than some of the others. And there's probably a lot of different reasons for that. And here's the NASDAQ from this October bounce here. It struggled really. It struggled to really break out in a big way. This upper trend line was a strong level of resistance. NASDAQ took a while to break above it after it struggled since the October bounce, but it finally marched above it starting in December, right around here, December to January. And then now look what's happening. We are starting to trend lower. And it's starting to establish its own downward trending channel. So here's the upper trend line, a strong one, the dash one. We broke below that and have not been able to break back to it. Broke below that right around February. Look what's happening every time we hit this the diagonal trend line, we come down. Broke back below this strong level of support. Solid line, but way below this level of support. Got to bounce back above it, and look at where it's failing at, right at that diagonal line of resistance, that solid line. So my guess is that eventually we'll break this level of support again and challenge this level that we've seen, I guess, around around March 9th. Challenge this level somewhere around March 13th, March 9th. So between the challenge this level, see this big green candle, and if we do not break up, do not hold support here, right around this 1100 level, we're going to see the NASDAQ start to really be affected in a negative way. But right now, the bears definitely in control of this market overall. Want to start to see some selling pressure that's going to creep in here, probably this week, and some support levels are probably about to be broken. That's what the NASDAQ looks like. Let's look at the Russell. Russell has been overall the weakest of all of them. So Russell has made it almost a round trip already from October. Here is the October lows right here. Started to creep up, establish this zone again, it's like we did with the other indices. They established a zone in December. At the pullback, established this zone here, which became a strong level of, became a buy zone or sell zone. And we are pretty much back into that area now with lower lows, lower highs being created and established the solid line, which establishing a downward trend channel, starting to establish a downward trend channel or diagonal resistance. So I do think that the Russell's going to fail this zone. This is already starting to fail. You see dips below it here, starting to fail the zone. And I think we're at the top of the zone, and we're probably about to see another rejection. If we get a rejection here, we're probably going to see the Russell challenge the October lows much faster than everything else. We're very close to that level, which is this dash line down here. All right, so that's what we look like on the Russell. It's definitely starting to break down in a major way back to a zone that's going to turn into a buy or sell zone, which I think is going to end up being a sell zone. I think we're going to break down below this level. That's what the Russell looks like. Let's take a look at crude oil because it also is showing something interesting. And crude, it's in a weird zone right now. So crude, it was in a stronger term downtrend for quite a bit. Let me look at this yearly. So this is something that I pointed out last week. Wasn't too sure to make out of crude, but crude got as high as 123 back in May, about a year ago. Started to trend downward. Then it started its own trend channel. Got back below 90, and then we started to trade in a range, and it's nice trading range here between 70 to just above 80, 70 to just above 80, 70 to just above 80. Then all of a sudden we plunged below it, got down to as low as 64, folks, below 70, 64, I was under the impression that this lower trend line here in the middle, once we broke that one, we were probably going to continue to see some selling pressure. But look what's happening. So crude could be about to fool us all. And it has got down to below 70, hit that 64 to 65 right, and it's coming back into this range. It's coming back into this range already. It's back into this trading range that we are seeing. This could be establishing a new upward trend, folks. So I'm going to be paying very close attention to crude. And I already saw some unusual option activity in some of the energy stocks, such as Devon, Oxy, ExxonMobil. Started to see some unusual call option activity over the past week and a half or so. This could be confirming that crude may be about to establish a upward trend channel, which is what I think we could be in store for, the opposite of what we're seeing in overall markets. I'm be paying very close attention to this. I did establish a call spread position in Devon because I saw some unusual option activity, and I'm going to sit and see if crude holds that thesis. So crude could be on the way back up, and it looks like this is the channel. It looks like it is starting. So if crude can hold back above this lower, get rid of this now. I don't need these. So if crude can hold back above this trend line, this lower trend line here, midway trend line, should I say, that I established. So we can get crude to hold above this trend line and back into this zone, we have a good chance to see crude break above the upper part of this zone that we were in. So we're back in the zone now. We fell out of the zone and we're back in the zone. The zone is this whole area you see here. And we're back in the zone. And if crude can continue to stay in the zone and establish a nice strong upward trend and break out of the zone, we can start to see much higher crude prices. So that's something to pay close attention to. If that happens, folks, then that is going to play on overall CPI data in the future, because if we already know that core CPI, when it came out, it was still hot, it was still elevated. And if energy starts to add to that, oh my, we're going to start to see the market really start to struggle, and CPI data could go back up versus go back down. So this is something we're paying close attention to. Look at the oscillators and the full stochastics; they're starting to trend higher. Wins percentage is already higher and approaching touching over abort territory. CCI also trending higher. So pay close attention to crude. We were stuck below 70. Now pre-market crude is at 73 and continuing to go higher. So we are firmly in this zone now, back in this zone with a upward trending channel forming. So it's starting to trend higher. It's starting to establish its own, starting to establish its own new trending channel, folks. Upward trending channels like what was starting to form in crude. So that's something to pay close attention to. Now we'll draw your attention to one more thing. Take a look at gold. And I'm not sure if I showed you guys the SPXA 200R. I'm gonna show you guys that too, which is a tool that tracks the amount of stocks trading above their 200-day moving average. We're gonna show you that. If I haven't, I'll show it to you again. Here's gold. Again, I did tell you guys that gold is an upward trending channel. And just like any upward trending channel, downward trending channel, it has pullbacks. That's part of the process. It's like gold is in that pullback process. Not sure how far we're going to go down in this channel, but I do think we can still see a little more pressure on gold before it finds some type of support somewhere, hopefully in the middle of this channel. Could go all the way back down to the 1900, folks. So keep that in mind as we go through this cycle with gold, but it's in a longer term upward trending channel. The bottom of this channel now is right around 1840, and the upper channel is right around 2000, a little bit over 2000. So we could continue to see more pullback in gold. Not sure how far we'll go, but I think gold is in a stronger upper trending channel, so eventually they found some support somewhere. Now, let me draw your attention back to the SPXA, which is the tool that tracks the percentage of stocks trading above that 200-day moving average. SPXA 200 is the one that tracks the stocks trading above the 200-day moving. Now, I'm not sure if I pointed this out, but also this is also another confirmation. By looking at this tool, which tracks, again, the percentage of stocks trading above the 200-day moving average, the higher the percentage, which means you get more participation of stocks that are rallying to the upside or participating in a move upward. And as we start to trickle downward, that means more and more stocks are starting to be sold, starting to filter below that 200-day moving average, which is positive for the bears and negative for the bulls. Now, with that established, same thing here. You'll see a similar setup for that I just showed you in S&P, Dow Jones, NASDAQ. There was a zone that we traveled in or battled with back in December. As you can see here, it's a zone that we battled with back in December when the percentages got high, and then they pulled back to this level, and then they went as high as 76% of stocks trading above the 200-day moving average. Where are we at now? So right now we are just about 43% of stocks trading above the 200-day moving average at the closing day on yesterday, Monday. And we are at a critical juncture. And again, this is pretty much tracks the overall sentiment as this, if we don't get back above 50, it's pretty much definitely in favor of the bulls. So that means right now it's showing 43% of stocks trading above the 200-day moving average, which means there's over 60% that are not, which is very, very negative sentiment for the overall market. All right, now we got that pretty much out of the way and established. Look what happened when we got back to the zone. This is the zone I have highlighted. This is the zone we have highlighted where we pretty much was using the area as a area of support and resistance. We broke out above that level back in the beginning of this year. Now we're back, came back to the level, broke right through it, and now look what's happening. Now that level is now becoming a level of resistance. Here, tried it again here, tried it again here, we're trying it again here. Now, if we break below that level, again, we get up, right now we're starting to turn from that level now. And this is a temporary level of support right here, which is about 35% right here where I drew this lower trend line, about 35%. We drop below that, folks, we're going to see the overall sentiment continue to look negative, which is going to be negative for overall markets. Again, overall sentiment is negative, and it's probably about to get more negative in the near future if we don't get back above 50%. Right now we're at 43%. I think throughout the rest of this week, that's going to dwindle, even probably get down to low as 30%. So we already have oscillators in CCI. It's like it's starting to turn over. Williams percentage is starting to bend lower as well. So this tool also confirms that the overall sentiment of the market at the close of business on yesterday has started to turn back negative. And even when we've seen this little spurts, we have not been able to get a strong pushback above 50%, which has just been negative. So there's nothing bullish about this, what we're seeing in the market. All these little rallies we're seeing recently, there's nothing bullish about it. It's all just traps. I think we're going to remain that way, and we're about to get more negative. All right, folks, hopefully there's something you guys can use as you go throughout the rest of this trading week. I know it's on Tuesday. Normally I do this on Wednesday, but I've seen this happen, and I wanted to give folks some fair warning. Again, don't fall in love with a bull rally within this bear market. Catch you guys next time.